Hey, reset snipers, you've been waiting for a long time to hear from me. So, here you get it. I'm going to need your help though if you want to have more of these more often. But let's just go. So, I've been, a lot of written material that's been read, Paving the Road to Hell. I certainly suggest you get this and you read it all the way through. Lots of interesting revelations, history in terms of what you should know, how things have been spelt out to you in the incorrect way, a lot of misnomers, so much of value that I've got to catch up with you on here in this book, leading right up from World War One, Lusitania, the bankers funding, of course, Hitler, Warburg, Valerius, his relationship to the Rothschild family, etc., etc. So much to say and so much to catch up. There's about 6 videos just in recent readings there. There's, of course, The Third Truth, the global lockdown. You should consider getting a book like this to read, very much on the lockdown agenda and the coming great reset. It's not what you think it is. That's Sean O'Hanlon. You can grab hold of that. I also had this little delight arrive that appears to be a rather chocolate-colored person of color. It looks a little bit cartoonesque, however, with green European eyes and long hair. From transgender to transhuman. That is their goal, by the way, with the transgender game, which is why people have criticized me for being divisive and being lacking sympathy for trans people and being a plain old meanie generally. And my point is I have immense amounts of sympathy that people that might be under the impression that they are not of the right gender and trapped in the wrong gender body. I think it starts mentally, actually, and they probably need some mental counseling. What they don't necessarily need is a major agenda to roll out reassignment, gender reassignment. What's coming out of this, however, that's really, really interesting. And this case of this book and many awards, by the way, if you're a leader in this was Martin Rothblatt. Note the Roth as well, very interesting, Rothblatt. Martin, who now goes by the name Martine, I would imagine I would become Francine, for example, although Francis itself actually is non-gender. I could be Francis and be a woman as well. The opportunities in my name. But anyway, back to this guy, or girl, should I say, now. He talks of the apartheid of sex. Apartheid has become a very useful phrase. It gets bandied around. There's not many fans and supporters of apartheid to be found. So the apartheid of sex clearly sets up the good cop, bad cop immediately. And everything is black and white. Remember when they want to brainwash you, it's all black and white. So they use fascist as the evil, when in actual fact I would say the Bolshevik communist was probably the greatest evil of all. And they will use phrases like the apartheid of sex. So the apartheid of sex, a previous work by our friend Martin, before he launched into the transgender to transhuman goal that he has for us as a thought leader, well thought of and cutting edge thinker. What the apartheid of sex is all about, he says, let's go. The summary of the evidence from the animal kingdom. So this person says he makes scientific arguments which I think would have impressed Charles Darwin. Darwin, of course, big fans of Darwinianism as well, this agenda. Based on naturalistic evidence drawn from both animal and human evolutionary biology to support its conclusion, so it's concluded in the apartheid of sex, that there are no absolute binary male-female distinctions in nature. So there you have it. He's concluded that there are no absolute male and females distinctions in nature. The summary of this evidence from the animal kingdom produced an indelible impression on me. The slipper shell, and then there's its Latin name, lives in oyster beds and gradually changes from male to hermaphrodite to female in old age. So there we go. The slipper shell. You found a crustacean of some variety on the bottom of the ocean that it's deemed by you and your scientists actually morphs from male through some form of fluid intermediary stage into female in the old age. On the other hand, a certain Caribbean coral reef fish starts out female and die as males. Many types of fish, such as butter hamlets, swordtails, change sex back and forth to balance the ratio of male to females currently around them. The sex ratio expressed by these types of fish depend on their social surroundings. There you go. There's that fluidity. We're this natural organism that just balances up genders. Isn't it interesting that they've turned to shellfish, which have got probably more mercury in their system and have no red blood cells? We don't talk of lions and lionesses where men have testicles, the male lions have testicles and the lionesses bear cubs. You know, so much closer. Hearts beating, vein systems with red blood when shot. Mammals, typical mammal animals. You note that we've taken this quantum leap and found some complex underwater dwelling, more mercury than any form of blood in its system, as the definitive proof. Its conclusion, its absolute conclusion that there is no binary male and female. What does that say of the giraffe? What does that say of the dog and the cat? These mammals that have systems far closer to us. Do we have any kittens that started out female and morphed into maleness? This incredible, just that opening paragraph just tells you the extent of utter reach that they are going for to find these unique examples of very specific creatures that are not anywhere remotely related to any animals that are far closer to us in terms of this. The chimpanzee, all of these things that have regularly been used in animal testing. Do we test on crustacean sea oysters a new vaccine? I think not. We seem to go for rats, chimps, and pigs. Well, how many of those have changed sex in the course of their lifespan, have rebalanced the sty because there's too many men around and they've just flippeninged to a woman? It's incredible. Anyway, I've got so much to discuss with you on those topics, but that's not the topic of today. It's not the rant of today. I need to ask you, and this is going to be a great video. You're going to enjoy it. And I'm going to deal with Biden and his stimulus showers. This is a tweet from the Washington Post. I'll be showing it to you in a second. Biden stimulus showers money on Americans, sharply cutting poverty in a defining move of presidency. This is bold leadership, cutting poverty. Well, it's an absolute trope, this from the Washington Post, only to be expected. Who's the Washington Post owned by? It's owned by Jeff Bezos, a fully fledged Ashkenazi communist whose staff are on borrowed time when they go to the toilet, on slave wages, paid a pittance, bullied and shoved around, all driven by performance points to the end of infinity, where you're on a perpetual runaround, fast being replaced by robots in the new technocracy communism. If you want to see your corporate future, see Amazon and see its owner. That is it. That is your corporate future. Extreme wealth at the top, extreme poverty labors at the bottom, soon to be replaced by machines. And being advertised for you on your corporate propaganda media. Amazon. New steps taken to ensure no COVID virus spent. Buy while at home on lockdown. Your main news services in America pushing the technocratic oligarchy that also look after the servers for the military industrial complex, provide the surveillance Alexa inside your home, and give away your data on an extreme level to the dark state secret services, etc. Anyway, so let's get into this particular tweet tweet. So here it is. There's Biden, the leader himself, the real man, striding forwards in a great role of leadership. Biden's stimulus showers money on Americans, sharply cutting poverty in defining moment. And here's where this is going to take you, guys. Here's where this is going to take you. This is how it's being framed. And here's where it's going to take you, by the way. And it's amazing to see the number of people that are responding to this tweet and are actually responding, well, Trump did $2,000 in, $1,200 and $800, and the others are going, no, but Biden's also done other stimulus, and they're getting into the red versus blue argument, as if you really had any man on your team ever in charge before or after Trump. So my overall view is going to come right now. I'm going to take you through a couple of tweet responses of how we're going. I've done a small whiteboard just to explain a couple of points. So let's get straight into it. But before I do that, I just want to show you the last video and the current YouTube at the moment. We have 8,100 subscribers. YouTube only lets you live stream at 10K. It takes ages to do Reset Sniper on Camtasia, edit, re-record, reconfigure, and then load it up. It's not timeless. It takes a lot more time out of me. Not being able to live stream is doing this channel damage in terms of the amount of attention it gets. If you would like more of this, we need 1,900 subscribers to get through 10K. We need 1,890 subscribers. Share it on all your Red Pill websites. Get people to subscribe, get them to hit notifications. Then we can live stream and we can put out a lot more content on the fly, even straight from a mobile device. And I can give you short versions and short, quick hits. At the moment, because it's irregular, it has to be long. There's so much to be seen. It's quite a commitment. We'll be able to get a lot more up for you. So let's get straight into our Biden tweet response that I've done with regards to everything our friend Mr. Biden has done. So here's how I'm framing this. What is actually coming right now from Biden is in actual fact inflation. This whole story is inflation, and it is very, very serious inflation. And what's actually happening is the peasants are being brought in at the last moment. So for me, the poison gifts Biden brings as the Santa Claus of inflation is showering currency devaluation on everybody. And that is taxation. Taxation is reduction in your buying power of money. So let's just cover that from our whiteboard for you over here. Just a couple of things to illustrate. If you have, let's say the total currency in circulation is this drum of water over here. So we're looking over here, and I'll grab the pen and I'll highlight where we are. If the total amount of supply of currency is in this drum of water over here, let's say it's a ton of water, and over the space of a number of years, let's even give them a decade. They've done this in far less than a decade. They've probably quadrupled the currency in a decade. But let's go from the bailouts. The bailouts, in fact, we'll go back to long-term capital markets failure, which was where they bailed out a hedge fund first time out. So they proliferated currency. They increased the number of water in the barrel. Only you didn't get that new water. It went to somebody else. And then we had the banking bailouts of the 2008 all the way through 2000 QE 1, 2, 3, twist, 4, etc. Right the way through. That was going on during that period. And let's say they only doubled currency and they dropped essentially another barrel of water on top of here in terms of the total currency. So now your currency is this 2x barrel, this huge cylinder of water. And let's say our total economy in Main Street, real, buying stuff at the shop down the road, your small business doing some business activity, selling some services, your real economy represents the balloon over here. And the total size when you add the asset economy for institutions, for example. Now, it would have started a lot bigger, but I'm just going to start it kind of small. So this is your equity markets, your home equity, your commercial property equities, all of these asset classes that mainly institutions are invested in. But at a retail level, you might have some mutual funds that are invested in the stock market. Maybe also Bitcoin has become a part of that, but it was very small at one point. It's the second. Think of the guy that used to make the dog out of the balloon for you. It's the second part. He's twisted it, and that's the second part of the bubble. What's ended up happening in this real economy, which is where you and I, Main Street, live over here, Main Street, is that the asset economy for particularly the institutions, but the stock market for those that were invested in the stock market, which is your high net worth people, meaningfully invested. I'm not talking about those of you that are putting $50 a month, $100 a month, even $1,000 a month, even $5,000. You are a minuscule element of that. The hedge funds, the net long funds, the mutual trusts, the vanguards, the investment bankers, all of that. This extra money has gone in on currency and corporate bailouts, particularly from the hedge fund in long-term capital, later into the banks, during 2008 all the way through 13, 14, all the multiple QEs that have gone on. And what's actually happened is this knot here has seen this part of the bubble here get substantially bigger. Most blue-collar workers do not have meaningful wealth changes in wealth when you get the stock market going up, or even Bitcoin going up more recently, or the bond market going up. We've had a 40-year bond bull with the bond market going up and up and up, and we called the top in March 2020 last year. We said we felt that was going to be a slap in the face high. I've done on the Market Sniper channel technical analysis of that, and I've referred to it a lot more recently, especially as the rates have gone up. We referred to the yield inversion as well on the Market Sniper site, and how you snap out of those yield inversions with massive extreme moves in rates. And now we're starting to see this all happen, and it's taking everybody by surprise, as if low rates were there ever going to be forever. There was no inflation. What this actually caused was inflation, guys, but it didn't cause inflation in the real economy. Your balloon there of the real economy is roughly the same size. What you got was a segregated segment of the balloon that has been expanded, and all this new water has been pumped in there. Think of that new water as new fiat and new currency. And what's actually happened is you've got a hyper overvalued. You've got Coca-Cola with more debt, lower revenue, lower earnings on 2 and a bit times valuation. That is just valuation extension. Apple hasn't really grown immensely in terms of device sales, went from when it was 800 billion market cap to the fact it's now 2.1. The bulk of that has come in multiple of income extension. So you've had it go from a PE of around 16 to nigh on 31. Tesla, it's incredible. They've made more money on their Bitcoin than they've made in cars. The future money they will potentially make out of fleet sales to government and all of that has been bought deep into the future, where everyone will be driving a auto-driven, non-driverless car, essentially, auto-driven vehicles, autonomous vehicles, whatever they call them, in the future. So they've forward brought sales and profits on those sales that are not even anywhere in sight, that the investment in Bitcoin has actually made more money than their current sales levels in cars. And that's that expansion from there to there. And you haven't got any of that upside. But guess what? You're about to get the downside. I'll come back to pensions and governments and UBI and all of this rest of this chart, but I just wanted to explain. When they double the amount of money in circulation, don't forget last year alone, 24% new dollars. The dollars in your wallet, that's meant to be dollars and that's meant to be your wallet. You need twice as many to buy the same level of goods. And people will say, but the CPI, we haven't seen that yet. Yes, you have. You're getting Almost 10%, 9.9% on shadow stats, according to Ronald Reagan's own government stats of the ONS in 1982. So it's not my number made up, it's not John Williams's number made up, it's the government's old number made up. And it's the fact, it's what it was. And that's almost 10%. Now, if you're having 10% devaluation every year, it doesn't take very long before your buying power is halved with a compound. Remember, 0.9 buying power. You had 1 last year, you have 0.9 this year. You compound that on an ongoing basis and it falls away very, very quickly. Okay, let's go back to how this impoverishment is coming to you, and my tweet rant rage response to this hero Biden saving the blue collar worker with all these gifts. So what's happening by that is they are ramping the billionaire equity classes. So let's just expand this a little bit so you can follow along with me. They're ramping the billionaire equity classes as wealth because they are expanding money. When you expand money, you ramp asset valuation. Because the people, Elon doesn't need to eat any more bread, butter, or anything else. He has all the food he wants on scale. He's not going to be pushing up food prices. With all this extra money that he has, he buys Bitcoin. He buys Tesla stock. He buys other mutual funds, stock in other companies. He buys future commodities his company might need. He pushes prices up everywhere in assets particularly. So what will happen is the stock market goes higher. The rich get richer on all this new created money. What happens for the man in the street? He gets one check, which will largely go on consumption, almost assured, the bulk thereof on consumption during that period, and then sits out a while until the next check comes. So who benefits from Biden's gifts most? The billionaire equity class owners, landowners, anyone which has assets that go up in wealth. Much more than the stipend of a one-time payment to a blue-collar worker who's accumulated a lot of debt. More on that to come in a moment. So that's point number 2. So what else happens? Inflation destroys the working poor wage earner entirely as they drown in the cost of living increases. So after asset price inflation, commodities start to run. We're seeing the coffee, the softs, the agris, the industrial metals, we're seeing oil, we're seeing all of these elements re-inflating. And what does that do? It hurts that same working class immensely. It hurts them immensely because now they, they start to don't get as much purchasing power out of their current wages that they get. The National Health Service, by the way, has been offered 1% for nurses. 1% for nurses and the staff in the National Health Service. If you are a wage earner, and I call it, I would say, unfortunately, nurses make up part of the working poor. You will drown in the cost of living increases whilst working and taking extra shifts and working yourself to the bone and barely coming out and being married to someone else doing much the same on 2 salaries without children, living in a high-rise apartment with surveillance all around you, high transport costs in London to go to a London hospital and barely afford to exist. That's been coming and has been known for a while. The other thing is marginal tax racket, and it's a racket, yes, but it's the bracket creep that I'm referring to, is that actually the 40% tax rate that exists, the super tax rate in the UK, and I think it'll probably go up at some point as well, was designed to capture the real top end. It was a few when it was first introduced. This won't even affect many people. It's just the top end, a handful. It was a few 100,000, mainly made up of long-standing lawyers, bankers, etc. Now, a working sister, 25 years into her career, will be facing super tax brackets. As that cost of living increases, pushes her salary up, more of it goes into marginal tax brackets. Not at the rate of 1%, particularly quickly, but some of them will. And in other careers where they may get 3 or 4, or they've made progress personally in their career, they just get dragged into higher bracket creeps. So inflation taxes you in two ways. It taxes you in the loss of buying power of your money, and the amount that you need to be paid to have the same standard of living takes you into a higher tax bracket whereby they are entitled. And they do not get the benefit of equity, property, precious metals, Bitcoin portfolios, mutual funds, etc., appreciating in this inflationary environment. So it is a tails you lose, heads they win type situation. Inflation also devalues large debt portfolios. I wonder who has large debt portfolios. Well, let's discuss it. Government, for one, has very large debt portfolios. We'll come to pensions and debts in a minute, and I'll revert back to the whiteboard on that. But essentially, when you devalue money, you devalue the debt too, because it's reflected in terms of that currency unit. So by devaluing the dollar, the pound, the euro, when you owe €1 million, it devalues. It devalues. So people that have property tycoons that have huge amounts of debt and have leveraged up to buy property, what ends up happening is the property asset goes up in value, assuming it's not full of people you can't throw out and it's a rental portfolio, which is a separate point, and assuming it's not full of commercial property where you don't have businesses anymore, those property tycoons are getting hurt there. But let's say it's $1 million pads with great grounds and lots of space, and you're the marketeer of these, and you borrowed an immense amount over the last 10 years to build them all, and you're selling them now to millionaires who are all running from New York, California to get rural and have amazing crash pads with tons of space away from the maddening government. Well, the prices you can sell those for go up and up and up, and the debt that you accrued over those 10 years to build those property items are going down in buying power, down, down, down. So you're getting a divergence. The asset is accelerating thanks to the inflationary effect, and the debt is being deflated thanks to that same inflationary effect. So the highly indebted, asset-rich individual benefits immensely out of this. If you'd borrowed $1 million 10 years ago and put it in the stock market and were just managing the payments, the interest rates would have been super, super low. They're starting to turn now. But as inflation climbs, that $1 million is nothing now. You would have probably be worth you could even be worth $10 million depending on which equities you bought 10 years ago in that stock market already. In which case your original 100% loan to debt could now be no more than 10% in a good investment portfolio. Not everybody's done 10x over the decade, but the market has gone very, very strongly. If you'd lent heavily on tech, biotech and pharma during the last decade, which was not the hardest call, you could have done exceedingly well. So inflation is also killing the layman's government and private pensions, which are stuffed with low-yielding and now fast devaluing debt, leading to lower sub-breadline annuities for the retiring working poor. So on that point, let me